Do you think that a breakout of a level is a signal to enter? In fact, most of such breakouts end up in a reversal. These are false breakouts, a classic trap into which not only beginners fall, but also experienced traders who don't know how to recognize and trade such movements correctly. Today, I will show you how to identify a false breakout even before entering, what signals on the chart indicate a false move, and how to use it in your strategy. And at the end, we will analyze a ready-made system with entry points that can be used in real trading. To apply the system confidently, you need to understand, a false breakout is a situation when the price goes beyond the level, but does not continue the movement and immediately turns back. On the chart, it looks simple. The price approaches a strong level. Most traders at this moment open trades for a rebalance, placing a stop loss right behind the level. Another part, on the contrary, enters on the breakout and puts a stop behind the last candlestick before the level. As a result, the market takes out both of them. And those who waited for a false breakout make money in this situation. That is why it is important to realize that such movements do not happen by chance. That is why we need to learn to see such situations in advance, not only to avoid stops, but also to make money on reversals. And for this purpose, it is important to understand how exactly a false breakout appears on the chart. After all, such movements do not occur for nothing. There is always a certain logic and market dynamics behind them. There are always two sides in the market. Some traders push the price up while others push it down. When the price approaches a strong level and breaks it upwards, it may seem that there is a beginning of a trend. But if at that moment sellers with large volume become active, the movement is quickly stopped and the market turns around. The second scenario is even more tricky, when large participants themselves create a movement in order to push the price beyond the level, complete the position, and just let the market go. The price remains without support and comes back. Such breakouts look convincing, but they end up the same way, with a reversal. That is why it's important to look not only at the breakout itself, but also at what happens right after it. Because a false breakout is not just a movement beyond the level, it's a scenario in which the main thing is the market reaction, not the moment of exit. Usually it starts with a sharp impulse. The price goes beyond an important level support or resistance, and it seems that a new movement has started. The candlestick may look powerful, but it is deceptive. It is often accompanied by small volumes. And this is an important signal. If the breakout is not followed by active support from the market, if the volumes do not grow, but on the contrary decrease, it means that the participants are not ready to continue the movement. This is one of the signs that the breakout may turn out to be false. After one or two candlesticks, the market starts to slow down. The movement loses strength, tails appear. Candlesticks become indecisive. If the breakout was real, the price would be fixed at the level. But in case of a false breakout, it quickly goes back, closing inside the range. It is especially important to observe how the candlesticks close after the breakout. If the next candlestick closes below the level and forms a reversal pattern, it is a clear signal. The breakout was not confirmed. On the chart, it always looks like this. The price went out, could not hold, came back, and all this happens against the background of weak volumes and rapidly losing strength. It is this sequence: a sharp breakout, no volume, rapid weakness, and reversal. That is the basis for the entry point, which we will talk about next. So we figured out how a false breakout looks and by what signs it can be recognized. Now let's move on to the most important thing: how to make money from it. Here is a step-by-step strategy that will help you to correctly enter a trade on a false breakout. First, an important clarification. If you are just starting to use this strategy, it is better to work on the older time frames, H1, H4, or D1. On them, the levels are more significant, movements are cleaner, and false breakouts can be seen much better. On lower time frames, like M5 or M15, such signals can be unreliable. Now let's move on to the trade itself. The first thing is to wait for the most false breakdown. We already know what it looks like. The price goes beyond the level, but does not consolidate. Volumes are weaker. The candlestick goes back inside the range. This is your first clue. Do not rush to enter on the breakout. Wait for the return. After that, it's important to get confirmation. It comes in the form of a reversal candlestick, a pin bar, engulfing pattern, or clear structure, which shows that the market starts moving in the opposite direction. Now, the moment of entry. There are two main approaches. Aggressive entry is an entry immediately after the return under the level. You can enter on the market or on a pullback, with a stop just above or below the tail of the false breakout. This method is suitable for those who are confident in the setup and want to enter at the most favorable price, and a conservative entry after additional confirmation. For example, after a retest of the level. From the opposite side, when the price is returned, rolled back and starts the movement again. Yes, you will enter a little later, but the entry point will be more reliable. As for the stop loss, it should be placed outside the false breakout, not close to the level but with a reserve, so that the shadow of the candlestick doesn't catch it. It happens quite often. Take profit depends on the situation. Personally, I prefer to work with a minimum ratio of 1-2 in terms of risk, but if it is a really high-quality false breakout, the movement can give even 1, 5, and even more. I know that false breakout is not the easiest strategy, and yes, it works. Yes, it gives excellent entry points. But to use it confidently, you need time to learn, to observe, to gain experience, to train your eye and discipline. And not everyone has the opportunity to spend hours in front of the monitor. If you are not ready for deep study, but you want your account to grow systematically, I have a solution. This is a MiloBot PRO Expert Advisor, a fully automatic system that opens and closes trades without your participation. It doesn't use false breakouts. It works on a different strategy. The author's strategy tested on real trades. Over the last 4 years, MiloBot PRO has shown excellent results. The account has grown from $34,000 to $272,000, and you can check it for yourself. The statistics is open on my FX book. If you want to test MiloBot without risk, just download the demo version and run it on history. See how it works and make a decision based on your experience. Links to the Expert Advisor and the demo version are in the description below this video. Remember, false breakout is a tool, not a magic button. It can indeed give strong and accurate entry points, but only if you use it correctly. Any strategy takes time, experience, and practice. You should not run to open trades on a real account immediately after watching this video. First, practice on demo. Observe how false breakouts are formed, develop your system, test it, and only then move on to real trading. If you take it seriously, false breakouts will no longer be a trap for you and will become a part of your strategy. If you like this video, put a like, subscribe to the channel, and turn on notifications so that you don't miss new videos. And if you have any questions, feel free to write in the comments. I read it and try to answer everyone.